really bullish. I would suspect that it is likely that in real terms, the gold price stays constant, which would suggest in nominal terms that its rise mirrors the decline in the US dollar. Ergo, a 75% decline in the purchasing power of the US dollar over 10 years should likely result in a nominal gold price increase that is 3 or 4-fold over 10 years. Silver's a speculation. My experience has been that sort of midway through a precious metals bull market, when the generalist investor is attracted to gold's momentum and the precious metals narrative, and he or she comes down into the precious metals space, silver tends to outperform gold. And silver's performance in the last 3 weeks would suggest that we may be at that moment. The trader in me, which is a small part of who I am, tells me that silver may actually break out in October.
Gold continues to hold its ground as one of the most reliable stores of value in uncertain economic conditions. While the real price of gold may remain steady, its nominal value is expected to mirror the long-term decline of the US dollar. If the dollar's purchasing power falls by 75% over the next decade, the nominal gold price could potentially rise 3 to 4 times over that period. At the same time, silver emerges as a more speculative opportunity. Historically, silver tends to outperform gold midway through a precious metals bull market, particularly when mainstream investors begin to enter the sector. Recent price action in silver over the past few weeks has shown signs of strength, raising the possibility of a breakout as early as October. RickRule, a veteran investor and former president and CEO of Sprott U.S. Holdings. With decades of experience in natural resources and finance, he is widely recognized for his expertise in precious metals and commodities. His analysis often highlights the cyclical nature of these markets and the importance of timing when considering gold and silver investments. If you found this helpful analysis, don't forget to like this video, subscribe to the channel, and share your thoughts in the comments below.
Well, actually, it's not that crowded a trade. The anti-US dollar trade is a very crowded trade. But the gold trade is surprisingly uncrowded. We have seen a real increase in the gold price, largely due to foreign central bank buying. The flow of retail funds into gold, as measured by the ETFs, didn't really start until 20 weeks ago. JP Morgan Chase said as recently as 6 months ago that the market share of precious metals and precious metals-related securities is less than 0.5%, which is to suggest that gold occupies less than 0.5% of American portfolios. The 4-decade mean market share of precious metals is 2%. Should gold's market share revert to mean, that would suggest a 4-fold increase in interest. So while I take your point about the increase in the gold price, I would suggest to you that relative to other gold bull markets, we're in relatively early innings. I would further suggest to your listeners that they consider gold in the context of the prospects for the advancement of the US dollar. If they are happy with the level of debt and deficits in the United States, if they're happy with US governance, if they're happy with the prospect that the purchasing power of the US dollar might increase, or at least slow down less rapidly, then they should sell their gold. Unfortunately, for myself, I don't share those sentiments. I think that $130 trillion in off-balance sheet entitlement liabilities and $37 trillion in on-balance sheet liabilities, put into reference against a $5 trillion gross federal income, tells me that the only way out of our debt trap is to debase the US dollar. The consequence of that is that I see the dollar, quote, at least in US dollars, increasing. By the way, I don't think the US dollar will do badly relative to other currencies. I think they'll do badly too. I think that the US dollar will do badly in absolute terms. Well, not so much about gold, but by the US government. That's a new level of idiocy. That's a poorer performance than even I had imagined, and my expectations were low. With regards to gold, my thesis is pretty simple. The U.S. government would have you believe that the deterioration of the purchasing power of the U.S. dollar is measured by the CPI, which I think I mentioned on your show in January as the CPI. It's not a cost of living index. When I measure the increase in the price of the basket of goods and services that I consume, granted, I'm a fat old cheapskate who doesn't buy much. It would appear to me that my purchasing power is declining at about 8% compounded. If you compare that with the yield on the U.S. 10-year Treasury, about 4.5%, that means that they're paying me 4.5% in a currency where the purchasing power is declining by 8%, which is to say that they're costing me 3.5% of my wealth every year for 10 years. That makes gold look pretty attractive. If I can hold my own, rather than losing 3.5% real compounded, that looks like a good alternative. And I think that's precisely what people are seeing. I'm old enough, Amber, to remember the early part of the decade of the 70s, the last time that the deterioration in the purchasing power of the U.S. dollar was greatly greater, than the yield on U.S. 10-year Treasuries, which is to say the last time that U.S. dollar savings really, truly didn't work. And that ushered off the greatest gold bull market of my career. Let me explain that to you. No, I'm not going to give you a price target. I'm old enough not to fall for that bait. But let me tell you this. In the decade of the 1970s, the U.S. dollar lost, according to the Congressional Budget Office, 75% of its purchasing power over 10 years. During that same period, the gold price ran 30-fold. Now, I'm not suggesting to you that the gold price is going to run 30-fold, having already run 12-fold since the year 2000. But I am suggesting that the U.S. dollar will again, in the next 10 years, lose 75% of its purchasing power. Really bullish. I would suspect that it is likely that in real terms, the gold price stays constant, which would suggest in nominal terms that its rise mirrors the decline in the U.S. dollar. Ergo, a 75% decline in the purchasing power of the U.S. dollar over 10 years should likely result in a nominal gold price increase that is 3- or 4-fold over 10 years. The speculator, I'm more bullish on silver. I need to say, I own gold as a store of wealth. I actually save in gold. I maintain liquidity in dollars. Silver's different. Silver's a speculation. My experience has been that sort of midway through a precious metals bull market, when the generalist investor is attracted to gold's momentum and the precious metals narrative, and he or she comes down into the precious metals space, silver tends to outperform gold. And silver's performance in the last 3 weeks would suggest that we may be at that moment. The trader in me, which is a small part of who I am, tells me that silver may actually break out in October. If it doesn't, I think it's a matter of time. I remember well prior bull markets where I was attracted to the gold move and I was astounded by the silver move. And I expect that past is prologue. The asset class that has likely the most upside is that very, very, very small club of high quality silver equities. The combined market cap, and I'm not talking about all the little nothing nowhere silver companies that don't happen to have any silver. They're just looking for it. I'm talking about the ones that actually had some silver. Their combined market caps aren't large enough to handle the amount of capital that's going to come into them. I remember very well as a young man in the decade of the 70s, the shares of one penny dreadful, Coeur d'Alene, went from 10 cents to $65 in 10 years. Sadly, I was too inexperienced and too poor to take advantage of it. But the next silver bull market, we financed Pan American at 50 cents and Silver Standard at 72 cents, both of which 5 or 6 years later were $40 stocks. The upside in these things, when the stars align, is insane. I don't have a favorite, but I can tell you that I own New Pacific, which isn't a developer, it's an explorer. And I also need to say it exposes you to a lot of political risk. It's in Bolivia.
Okay.
I own Vizsla Silver, I own Abra Silver, and I own Aya Silver.
What if,
Those are, the last three at least, are all post-discovery companies with established reserves and resources that are, I think, strongly economic at today's silver prices and are 100% guaranteed to attract the construction financing that they need to build their mines. This is the least speculative aspect of a speculative portfolio, and they are the ones I own. Certainly that's right. I would suggest to you that minerals prices, or metals prices, pardon me, both gold and silver began to move in 2022, but the margin expansion didn't begin. It's important to note in the silver business that, say you're a $20 silver producer, and say the silver price goes from, let's say that it's at the beginning of the period that you're looking at, silver selling for $30, so you have a $10 margin. When the silver price goes to 40, an increase in the silver price of 25%, your margin doubles. And that's the sort of leverage that's inherent. I would also point out to you that $44 silver in historic terms is understated. Because we're talking about nominal terms. If you look about what the U.S. dollar buys, if you were to adjust the numerator, the U.S. dollar, back to the last time that silver was at $50, my suspicion is that it would take $125 silver to mark a real as opposed to a nominal high. And I think people need to understand that, which is to say 44 US dollars is not the same today as 44 US dollars was at the time of the last high in 2011.
Markets are entering a decisive phase, and the signals are stronger than ever. The balance between monetary policy, currency weakness, and investor psychology will shape the next steps. Those who recognize the underlying shift in value early are often the ones who benefit most when momentum accelerates. Precious metals remain a mirror of trust, liquidity, and long-term preservation. The story is not finished, it is just unfolding. Stay positioned, stay disciplined, and don't lose sight of the bigger picture. Stay informed, stay prepared, and make sure to like, subscribe, and share your thoughts below.